Yesterday we bought at 24,000 and the target was 24,150 to 24,200. By 9:40 in the morning, the Nifty had tagged 24,220. 40 minutes, both calls done. And then the Sensex spent the next 5 hours taking every single point back. Closed at 24,078, up 26 points. Sensex closed at 77,185, up 130 after being 460 points higher. The levels were right, the hold was not. This is the Tanmay Edge. You are listening to episode 82. I am Tanmay Gurtugoti. Let's go. Today's Sensex Expiry, guys, and before we get to Korea, and we are going to get to Korea, I want to show you what the option writers did yesterday because almost nobody caught it. And the Sensex chain for today's expiry, the headline number is a put showing PCR of 0.74, more calls than puts. Read the number on its own and you would say sellers everywhere, ceiling is heavy, stay away from the upside. Now look at where the calls have actually moved yesterday. At 77,000 strike, call open interest fell by 1,44,760. At 77,100 strike, it fell by 1,42,700. That is nearly 2,90,000 call that the writers covered, gone completely. And at 77,500, they added 12,48,220 calls. At 77,600, they added 14,98,720 calls. Read that again slowly, guys. The people selling upside walked away from 77,000 and 77,100 and rebuilt the resistance 400 points higher. That is not sellers pressing. That is sellers retreating and repitching the resistance. When a writer covers a strike and rewrites it higher, he is telling you he is no longer believes that the level caps the market. The ceiling or the resistance has moved up. And it is not only the desk saying it on Sensex. On NSE as well, this is official one. The pros, that is the proprietary accounts of members, bought 64,108 index calls net. That is the biggest single day call buy of this entire run. And on the other side of the trade, FIs sold 50,260 calls. So the pros bought the resistance that the foreigners were selling. Pros are long, FIs are short. In this framework, that pairing is the strongest bull there is to tell. And one more, guys. A point. Max pain on today's Sensex expiry is roughly around that 77,100 to 77,200 mark. The Sensex closed exactly in between that, 77,185. The magnet is already sitting under the market's nose. So the entire option book, the covered calls that happened yesterday, the pros that is buying, the max pain, the whole thing says the same boring, comfortable word. Grinding, pin and drift up to 77,200, 300 and die there. And then Korea opened today morning. The Kospi is down about 7% as I speak, 6,762. They triggered a sell side car at 9:10 their time. That is the circuit breaker that freezes program trading. It is in the 19th one this year. SK Hynix down 10% almost. Samsung down. It is a chip route and it is spilling into Japan as well, where the Nikkei is trading around 66,500. Now hold those two things next to each other. Korea down 7%, trading halted. Gift Nifty is trading at 24,070, up 0.12%. On a morning when the biggest chip market in Asia has a circuit breaker, the book says it is going to pin. So the tape from Seoul says gap. Both cannot be right and you find out at 9:15. And here is why I am not dismissing Korea as somebody else's problem. Look at what was already weakest going into last night. Metals down 1.1%, the worst sector on the board. IT down 0.67%. That was IBM guiding revenue below estimates. A global chip and tech story. Now the good news, guys, and it is a real. This is a chip panic, not at an everything panic. Hong Kong is up by 1.12% this morning. The S&P closed up 0.38%. The Nasdaq is up by 0.61%. America closed green. Brent is at 85.24, stalled on the same 85-86 levels for the fourth session. The Hormuz risk has now failed to fire 4 days running, which makes it cheaper. Either it's a big jump that is going to happen and a lot of accumulation in the crude is happening, or the Hormuz risk is gone. So this is narrow. It is chips, which means it can be contained, or it can be the pin that pops a market sitting 40 points above its gamma flip level. Let me give you two numbers that decide today and then the plan. Sensex at 77,000, that is the whole trade. Total gamma flip sign rides there. It is negative at 77,000 and positive at 77,100 to 200 levels. So above 77,100, the dealers would dampen the move. Every move and the market pins towards 77,200 back again. Below 77,000, they amplify it and the move gets faster, not slower. And 77,000 has already been tested. Yesterday's low was 76,980. The Sensex traded below 77,000 intraday and clawed back. So second tests are where lines either confirm or break. Nifty 24,020 to 24,040. Same idea that Nifty flips zone. The Nifty closed at 24,078. It is sitting 40 points above the trapdoor. 24,000 is extremely important. Today's Sensex straddle is trading at 491. That is market pricing a move of 491 points either way. 76,650 on the downside to 77,500 on the upside. Anything inside that is noise, guys, and we could see those levels tested today. The plan, Sensex expiry fade rallies into 77,300 to 400 after dropping probably in the morning trade. That is where 25 lakh calls got written yesterday, and they'll defend it. Buy the dips, so 77,020 to 77,060, just inside the round number. Only while 77,000 holds. Lose 77,000 the second time, because below it 76,700 opens and then 76,500, and somebody already paid for that. Put writers added 8,82 contracts over there at 76,500 and 9,53,000 at almost 76,000. They stacked that support for a reason. But remember this, today is not going to be an easy expiry. We could see that IV popping up. Nifty buy 24,010 to 24,020, not 24,150. 24,200 now carries 92 lakh shares written with 50,000 added, 50 lakh added in single session. 3 rejections and the 50 lakh new calls is the new information. And protection, the fear gauge has fallen to 13.27, down 3.49%. On a day, the index reversed 142 points off its high. So when a selling happened, the VIX didn't rise. Failing fear into a rejection means the sellers were in control and they won it. So own the insurance today, guys. Own it because it is cheap, not because volatility is going to rise. It is going to go to zero at the end. That is exactly the distinction I got wrong yesterday, and I am not making it twice. Reliance reports tomorrow, the big bang Saturday. You do not want to be naked into the gap with Korea on fire. One last thing, FIs sold 736 crore in cash yesterday, but they bought 441 crores of index futures. First futures buy in this stretch. That is the hedge coming off, not a mind changing. They still sit on a short book of almost 2,62,000 contracts, and they covered barely 1% of it. But watch the other side of that. DIS bought only 705 crore on Tuesday. They absorbed 2,928 crore. That is a 76% collapse on the support under this market in one session. The writers moved the ceiling up. The domestics thinned the support out. And Korea is down 7%. 3 days, same 2 lines. The first one that breaks decides the rest of the July. Have a great Thursday, guys, and a happy expiry. One ceiling that has moved up, one support that has thinned out, one circuit breaker in Seoul. Trade 77,000, not your opinion. This was Tanmay H. If you found value in this, guys, please share it with one trader friend who needs it right now. Subscribe to Apple Podcast, Spotify, and listen it live and first on rupeecase.com, where it streams first as well. And give a rating, guys, and a review if you want to add something in this podcast. Have a happy expiry.